Hi everyone, thank you for joining us for the second of this year's Green Future webinars. My name's Kath Crowther and I'm the Regional Director for the CLA in the East and your chair for today. A quick reminder that basis and narrative points are available for today's event if you watch it live. I'll give you details on how to claim those at the end of the session. So today we are joined by Jonathan Baker from Defra, who will give an overview of agricultural transition and the changes ahead, giving an update on the announcements made on Thursday with details of the SFI in 2023. Simon Fisher will then run through how to apply for the SFI before we pass back over to Jonathan, who will talk about countryside stewardship. Susan Twining from the CLA will then talk about the opportunities for wider natural capital and environmental markets. And then we'll have plenty of time for questions at the end in a panel discussion before we finish at around 2:20. Please do feel free to ask questions at any point during the webinar. Please click on the Q&A button, which is at the bottom of your screens. Please ensure that you use that Q&A button, not the chat function, because we will not be able to see your questions if you use the chat. It would also be helpful if you could say who the question is aimed at, if it is aimed at a specific person. Thank you, everyone, and I will now pass over to Jonathan.
Thanks, Kath. Thanks, everyone. So it's a pleasure to be here. So I'm one of the senior civil servants in Defra, leading on the kind of overall package of reforms as we reform agricultural policy within England. I was also formerly of the CLA, so it's always a pleasure to be here talking to, learning from, kind of working with the CLA and the membership. So what I'm going to do is just kind of briefly kind of orient us about where we are in the overall package of changes, and then talk through what offers are available from Defra across the coming year, focusing in on SFI, so the Sustainable Farming Incentive, and countryside stewardship. So it is worth taking a little bit of time. That we're in the kind of third year of the agricultural transition, and we're at a point of time where all of our offers are now on the table, and we are over time adding them and expanding to them and kind of accelerating the rollout. So the full spectrum of offers is now available. From our position is now about kind of increasing the delivery and kind of maximising uptake. So in terms of what we're doing, just a kind of quick reminder, so doing kind of three things here within England in terms of reforming agricultural policy. So we're firstly investing in farms to support food production and the environment. We're doing that by introducing new grants and a package of ongoing payments. And kind of thirdly, and most importantly, we're also changing the way that we as government work with farmers. So as much as for anyone else, it's a kind of a change for us as it is a change for farmers and for those who work with farmers. And the reason why I wanted to make that point is the way we're going to make a success of these reforms is by adapting, listening to farmers, CLA members and the CLA itself to make sure that our offers work fully for farmers. So through those reforms, we're going to be maintaining food production. We want productive and resilient farms. And we also want to improve the environment, climate and animal health and welfare. And today we published the Environmental Improvement Plan. So this is government's plan for improving the natural environment over the next coming years. That plan set out really clearly the role of farmers and landowners in delivering those changes. And it's worth having a look at that, the kind of scale of ambition. So that's kind of the overall intent. So it's going to zoom in a little bit about what we're looking to do across the rest of 2023. So it's quite an exciting year, I think, from a delivery perspective. So later on this year, we'll be making available 6 additional actions through the Sustainable Farming Incentive that I'll come on to in a minute. Farmers and landowners will also be able to apply for the next round of countryside stewardship, both higher tier, which will open in February, and mid-tier, which will open in March. There'll be funding for large-scale land use projects through the Landscape Recovery Project. We'll be opening up the second round of that later on this year. There'll be opportunities to access an annual funded vet visit to support animal health and welfare. And there's an ongoing offer through the England Woodland Creation offer to plant more trees, as well as look after the existing trees that people have at the moment. So kind of comprehensive package of ongoing multi-annual payments that are new offers that farmers can access across the rest of the year. We've also, we're doing 3 things. We're changing how we work, we're offering ongoing payments, and we're also offering kind of one-off payments, so grants. Again, across 2023, we're making a number of offers available to farmers. In the environmental space, countryside stewardship and farming in protected landscapes will be available for farmers to access. Farming in protected landscapes is just available in areas of outstanding natural beauty or a national park, but it's a very popular offer. The countryside stewardship will be available everywhere. We've also made some changes to that scheme as well to make it more attractive. Today is your last day to apply for our slurry infrastructure grant. Important way of making sure we are reducing the improving nutrient management on farm. We're planning on doing further rounds of that over time, but this is our first offer, which is available at the moment. Today is your last day to apply for that. And we have a smaller offer around the tree health pilot. So how we can help landowners better manage their trees in the face of kind of bugs, pests, and all the challenges that operate across the woodlands and the kind of wood environment. Also focusing on kind of productivity and innovation. There's a whole package. It's not just around the environment. There's a whole package of offers there. So one-off payments and grants through what we refer to as a farming investment fund. So that's got two aspects. One is around supporting farmers to get more equipment and technology, and that's been consistently oversubscribed, and we've responded and increased the budget so that farmers can access more funding rather, to improve their farm business, lower their costs, adapt to the changing world. And we're also expanding the scope of that so that, as well as those improving productivity and environmental outcomes, you can also access grants to improve animal health and welfare. We've seen a real success around the Farming Innovation Fund, which is funding for farmers, landowners, supply chains, universities, and others, and businesses to come together and start projects around improving productivity and addressing some of the longer-term challenges that the agriculture sector faces. So we'll be making more funding available for that. The last set of rounds through the Farming Innovation Fund were around automation. So we're looking at what are the big questions that the farming sector needs to get ahead of the curve of, and offering kind of farmer-led research opportunities for that. And a big priority for the CLA has been what we refer to as the England Rural Prosperity Fund. So this is something that will be delivered through local authorities, focused specifically on the rural economy and supporting productivity across the whole of the rural economy. Will be available again later on this year. So stepping back, that's quite a comprehensive package of opportunities. So from our perspective, what we're looking to do is give you as farmers and landowners a range of offers that can fit within your farm business. And those should all, from our position, it's not us kind of tying you guys in knots with different schemes that we think we need to kind of apply for and kind of bundle it all up together, but rather they've all been designed so you can kind of pick and choose what works for your business. What changes do you want to make to reduce your costs? What changes do you want to make to improve your sustainability? What changes do you want to make that help move your business model to from where it is now to where you want it to be? And those package of offers I just walked through should be there to help you make those changes. So we're providing the tools for those offers. You guys are picking them up, making them work for your farm business. And finally, it's really important, there's a package of offers that I've talked through. When you look at the slide pack, or if you go onto the Future Farming blog, you can see all of those kind of scheme names written out. You can be in more than one of those schemes at a time. It's supposed to be kind of pick and mix, working around your business. And importantly as well, making sure that those government funded schemes fit around kind of private sector financing, if you're accessing that as well. So what I was asked to do by Kath and Susan was focus a little bit on what's live at the moment. So where we are at the moment is the Sustainable Farming Incentive is currently open for around improving soil management, arable and horticulture soils, improved grassland soils, and the moorland standard. And I'll touch on those in a minute. The idea of Sustainable Farming Incentive is something which should be available to all farmers. You should be able to do it in a completely self-service way, no need for agents or advisors to walk through the process. We've refined it a lot based on how we've the rolling out of the pilot over the last few years. We roll it out in a controlled way, making changes in a way that's safe. We've seen the delivery of the scheme be really effective. We've seen really strong positive feedback from farmers who've applied for the scheme, and perhaps we'll hear from some of that in a minute. Agreement will last for 3 years, but one of our new innovations we've heard from farmers is the need for flexibility, is that every 12 months from your start date, you can add more standards, you can add more land, and you can increase the levels within the standards to do more. And the reason we've allowed that is because we know that lots of farmers will enter into a scheme at a certain level, find out it works really well for them, and then they wish they could do more. So we're making that wish come true in the way that we design SFI so it can change over time. SFI will initially just be eligible for farmers if you're in the basic payment scheme, but that's we'll kind of expect that to expand out over time. And you can apply for it if you have management control of the land for the 3 years of your SFI, for your agreement. And as I touched on, at the moment, if you wanted to, and maybe you should, and I would recommend that you should log on to gov.uk and apply for sustainable farming incentive. You can get paid between 20 to 40 to 58 pounds rather for the arable horticulture soil standard, or for improved grassland standard, so improving your soil health, putting in cover crops, reducing your reliance on expensive inputs, or if that works for you, undertaking some work across your moorland to understand what you've got on your moorland ahead of preparing for future offers. And we've recently made SFI even more attractive by adding a management payment of up to £20 for the first 50 hectares. And we've done that in response to feedback that for smaller farms, those schemes, SFI can be harder to apply for, and also that there are kind of costs of managing an agreement over time, which often we don't fully recognise. So we've heard that, we've adapted, and now you can access this management payment of up to an extra £1,000 per year for those first 50 hectares for the cost of delivering those agreements. And we're doing that because we are responding to how farmers telling us what matters. We want to make sure that our schemes work for farmers and that they're financially attractive, so we can get the uptake we need to achieve our outcomes. And as Kath touched on, last week we published, set out what we're going to do later on this year in terms of carrying on the rollout of a sustainable farming incentive. So from this summer, you'll be able to access 6 new standards and get paid for about 19 different actions. So those standards are around hedgerow management, integrated pest management, nutrient management, what we call a horticulture and arable land, which is kind of around biodiversity and land management, also paying for improved grassland and low and no input grassland. And choosing those standards, what we've looked to do is something we know farmers would like to do more of, something which works across all the different sorts of the farming sector, be it upland, be it arable, be it grassland, improved and unimproved, and something the activities we know we need farmers to do to help us keep on track for delivering our environmental outcomes. So those offers will be available later this year. This is actually an acceleration from where we said that we would be. We said we were going to do the hedgerow management, pest management, and nutrient management this year, but we've accelerated the rollout because we've seen the first year of the scheme go well, and we're looking to kind of pick the pace up so we can be more confident we're going to achieve our outcomes and make more offers available to farmers. So we added in an improved grassland standard, the arable and horticultural land standard, and the low input grassland standard. And if you want to find more about what those standards mean or how they look for you, again, look up on gov.uk on the Future Farming blog. So that's the kind of overarching kind of package around sustainable farming incentive. You can apply for that alongside all the package of other schemes that I've talked about. But I think a colleague is going to pick up and talk for a little bit more about the kind of nuts and bolts about how you apply for that process. So I'll hand over, if I may now. Simon, I think, is it? Yeah, Simon. Oh, Simon, are you there? If you're talking, you're not.
I am there, but I can't see that I'm on screen. So good afternoon, everybody. My role today is to basically give an overview of the SFI application process. This is largely based on the guidance for 2022, and whilst we know that SFI, and we just heard, is an evolving process, there may be changes, but the principles I'm about to go through will remain valid. So my first slide, please. If you could move the slide along. That's it. So to start with just some housekeeping items, the application window is a rolling one, so there's no deadlines. Applications go through the RPA's Rural Payments Online service, much like you've been used to doing on things like BPS and Stewardship. As always, preparation for the application is key, and SFI is no different. Please make sure you read the guidance that will include how to apply, and that's all on gov.uk. 2023 guidance will, of course, cover the 6 new SFI standards that were announced last week, and also the recently announced management payment. Alongside that, there's a few checks that you can do before you set off on your application. You obviously need to be eligible for BPS. You need to have correct contact details and permissions, as ever. Check your land details. This is particularly important because the land is linked to your SBI number, and that also you need to make sure that the land cover is correct. Land cover is an important point, as this allows the IT, the smart IT, to determine that if the land or the field you're claiming on is available to claim a particular SFI standard on. So as ever, the mapping of land has to be correct. If you're on a common or a shared grazing arrangement, then you'll need to apply separately from any of the non-common land SFI standards you're claiming on. Details of that application process will be given in due course. And lastly, both the application and agreement offers, they're all being managed online. There will be an annual declaration, which actually, if you had applied last year for the 2022 SFI standards, then that'll be coming up this spring for your annual declaration. And for those of you with agreements, there'll also be guidance on how to do an amendment. And Jonathan's referred to adding more land, more standards, and increased levels of ambition. Next slide, please. I'm now going to take you through the sort of stripped down process, stripped down guide to the application process, which I hope will illustrate a point that was given in feedback to the NFU by the class of 22, who largely felt that it was an application process which was straightforward and reasonably easy to do. So the first key message really is don't be daunted by the application. As this slide shows, unlike the online applications for BPS and Stewardship, you get into the application either logging on and by having logged on and verifying your identity through the business overview, click on through the various links, and when you get to apply for SFI, that button, you will then arrive at the first page that's actually up on the right-hand side of the screen here. That shows a 4-stage process for an SFI application, and that's what we're going to go through this afternoon. So next slide, please. Step 1 asks you about your land. It will give you a land summary and essentially replays the data that the RPA hold. It should be the same as the DPS data you have and reflect, or maybe might reflect changes to the land since that last application. It asks you to check the land in a land viewer, so there is a chance to make sure that they're all correct. It asks you to confirm that all details are correct. If you say no, it will actually give you information on how to correct land details. Now, a critical question at this stage of step 1 is that they'll ask you to confirm if you have management control of the land in your SFI application. This is required for the duration of the agreement, the 3 years, and clearly must be yes to be eligible. Next slide, please. Step 2 wants you to select the SFI standards that you want to apply for. I've put up on the slide the 2022 standards, the 2 soil standards for arable and improved grassland, and the moorland and rough grazing standard. Of course, for 2023, there are now new standards coming in. So we've got 6 new ones there, 3 more than we expected in the first place. But nutrient management, hedgerows, IPM arable, a low input grassland standard, an improved grassland standard, and one for arable and horticultural land. As at step 2, what you're going to be asked to do is select each standard that you wish to apply for. So next slide, please. For each standard that you want to apply for, it will ask you which of the actions within the standard you agree to. And that in turn then links into the eligibility for that standard, and hopefully will confirm that for at least it will confirm you for at least the introductory level of the standard. So this is essentially an upfront validation before the application is submitted. It's there to help speed up the validation process at the RPA end and ultimately your offer agreement. And this is what I've referred to on the slide as the smart IT. It's useful and helps the process, helps speeds things along. Next slide, please. We now move on to step 3, and this is at a stage of the application where you're being asked to do 2 things. Firstly, you're going to be selecting the land you want the SFI standard to apply to. And secondly, select the levels of ambition. Those 3 levels of ambition are the introductory, level, intermediate levels, and advanced level. Each level requires increased management actions, and in return for that, you get increased payments. All of these will obviously be set out in the 23 guidance. So next slide, please. You can see from this screenshot that you can view land parcels either from a list or a map. Once again, the smart IT enables the system to see if it is an available area for SFI. It'll also calculate the available land area. This is bearing in mind that some of the countryside stewardship revenue options and non-rotational options in place mean that you can't apply for both those and SFI on top of each other. That would be a duplication of payments. As you continue through this step, it'll even tell you the payment value of that standard. This is also fairly useful information as you go through. So essentially, steps 2 and 3 is this process of building up the application, which may be for the whole farm or, as is your choice, part of the farm. Having done that for one standard, it may be the case that your land parcel or the field that you're dealing with has a land cover that is eligible for another standard. And if that is the case, then you'll need to go through steps 2 and 3 for that new standard. So you're actually building up your application across the farm. Next slide, please. The last step is step 4, when you'll be asked to review your answers, particularly the actions you've agreed to do. You can link back to sections to change responses, but if all is okay, as intended, then you can click continue and you'll be asked to submit the application. As my slide shows, the last page you go through gives you a submission reference. Application submitted, your reference number on the green box there. And that basically, you take a screenshot of that and write down the number and put it in a safe place, because that's your evidence of a claim being submitted. You can also download a PDF summary of the application for reference after the submission, which obviously we always recommend. And then you need to sit back and wait to hear from the RPA with an agreement. Initially, turnaround times were obviously dependent on demand and any issues that came up in the application, but they have been less than 2 months, and in some cases less than 2 weeks. So they do happen quite quickly. We're not sort of hanging on for months at a time as we did with BPS. Once you'll be sent an agreement offer, and that'll be something you'll be sent on the online service, so you'll be able to review it there. You'll be able to accept or reject that offer. You cannot make changes at this stage. So my last slide, please. In conclusion, I've given a very quick and high-level overview of the application process, which I hope you can see is relatively straightforward, and that it will give you confidence to look at both the existing and the new standards that are being introduced for 2023 and can be applied for. The smart IT certainly helps the process, and it was certainly the emphasis of NFU, from NFU, that the SFI should be an application that the farmer can do on his own. The 2023 application and guidance is, as we heard from Jonathan, due to be published in the summer. I've not covered developments on the animal health and welfare annual vet visit process or details of the annual declarations and amendment process, such as 2022 SFI agreement holders will need to look at in the spring. So Kath, that concludes my presentation, and I'll hand back to Jonathan.
Thank you very much, Simon. Thank you very much. So what I was going to do was have a bit of a focus on stepping. So we've talked about SFI at a high level, and then Simon walking through the process, and hopefully you've seen that we're serious about our intent to kind of make things simple, easy, and to change how we work. So talked through the whole range of offers. It's in the focus to be on sustainable farming incentives, which we've now talked about, and countryside stewardship is the other big piece, big offer that's available. It's worth stepping back a little bit. I think countryside stewardship is a big kind of area that I'm pretty proud of the way that I think we've managed the transition around countryside stewardship, and that we're now in a position where we've got about 32,000 live countryside stewardship agreements, and that we saw about 94% increase where we are now compared to 2020. So that speaks really well to the interest and demand for farmers and land managers to get stuck into the stuff, which is really positive. But secondly, the improvements that we made to the way countryside stewardship was administered and the offers. And thirdly, you made some commitments that those people who moved into countryside stewardship and applied for it wouldn't be disadvantaged and we've a couple of times now we've kind of made good on that commitment. So last year and again this year, we've increased payment rates within Countryside Stewardship to kind of keep up as far as possible with the kind of increasing costs that we see across the farming sector. The Countryside Stewardship is a kind of hugely important offer that we've made sure those people in that scheme are not disadvantaged, and that they are kind of rewarded for kind of moving early, which is something that's really important to us as in terms of making this whole transition a success. We need to make sure that those who move early are not disadvantaged through that process. We confirmed at the CLA conference, no less, at the end of last year, that we're no longer going to build a whole new separate offer that we had previously we're going to call local nature recovery. And instead, we're going to stick with Countryside Stewardship, but kind of transform it and kind of make it better. So the idea, where we're going to end up is the same destination offer, which is simple to apply for, which is user-friendly, which has got really high outcome ambitions within it, and also has some of the features that we know that we need to keep up the step up in terms of increasing our environmental outcomes. So ability to be more spatially targeted, an ability to help farmers across large areas come together and work together, and some of the other ideas, such as, for example, paying farmers where they achieve better outcomes, what's so-called payment by results. So we know we're still aiming to achieve all of those things, but rather than a separate offer, we're going to, which we call local nature recovery, which we then flop everybody over into, we're going to focus on improving Countryside Stewardship. And I think that's the right thing to do because it's less delivery risk for us. Farmers understand Countryside Stewardship. And thirdly, we think we can get there faster. With 32,000 people already in Countryside Stewardship, we can make that scheme better. You can see a lot of people seeing a lot of benefit quite quickly. So what that means then is across this year, we're going to be continuing to improve Countryside Stewardship, pushing it as hard as we can. So if we were to look at specifically to kind of focus in on what we've done, we have, as I said, increased payment rates across the whole of the Countryside Stewardship offer. We've also done that for everyone in existing agreements as well. Still think that's the right thing to do because of where we are in the transition. We shouldn't have an expectation that every time we increase payment rates, we'll do it for everyone, including those in existing agreements. It's an extremely expensive policy, but it's definitely the right thing to do now at this point in the transitions of building up our offers. So we've increased our payment rates. We did that for revenue agreements, so your ongoing agreements, but also for capital agreements, because particularly capital items, we've seen that they're at a time so-called agflation. We just weren't keeping up, the offer wasn't just keeping up with prices on the market. So we've updated those payment rates so that those people doing capital offers, it still makes financial sense for them to do it. We've expanded the very popular catchment sensitive farming officers so that all farmers and landowners across the country can access free advice from a catchment sensitive farming officer. That's a really important way of that being signposted to specific grants that can help them. We've also made a big changes this year that if you're in a high level stewardship agreement, you can take on an additional Countryside Stewardship agreement. So if you want to hang on to your HLS, your high level stewardship agreement, because it's working well for you and it's working for the environment, we've heard that people felt they were locked out from being able to access some of these other benefits. So we fixed that by two ways, really. One, you can now have an additional Countryside Stewardship agreement, so you can work them alongside each other. I mentioned stacking earlier, so you're kind of living that, you can stack up your agreements next to each other. And we've also said that if you do want to step out of HLS and move into Countryside Stewardship, you can do that by applying for Countryside Stewardship and your HLS agreement then ending when you are successful to move into Countryside Stewardship. Before there was a risk you'd have to leave HLS before stepping into CS. So we fixed that based on response to farmers and stakeholders, and actually in particular CLA President Mark Tuffnell has been a real advocate for that for some time. We've also changed Countryside Stewardship, so what's referred to as higher tier options. We've made more of those available in mid-tier, which more farmers can access. You don't need an advisor to help you access that. We've allowed 3 years to complete the capital works, as we've heard that often 2 years hasn't been quite long enough. We've also done stuff like referring to an annual declaration rather than what was previously referred to as a kind of deemed claim. So we had this process every year that was just creating a lot of admin. So we've got rid of that to make it easier for farmers to update their agreements. So we're hoping that with that totality of a Countryside Stewardship with more options, more flexibility, more attractive, will continue to be a really attractive offer. In February, we're going to open up higher tier for applications. And then for March, mid-tier, which is kind of the engine room of the scheme, we'll open that up to applications in March for agreements to start on the 1st of January 2024. So that's what we're looking forward for kind of countryside stewardship at the moment. And then to step forward again, I talked about transforming countryside stewardship. We're working through with ministers, with the CLA and others, actually what we want that to look like. So for example, do we want to move away from the single application window? What can we do to do some things that we know work in SFI and have worked really well? For example, getting payments every quarter rather than every year. Can we look to bring that into countryside stewardship? So we're working through how we transform countryside stewardship so that it kind of meets our aspiration for it being a simple offer of high ambition that works really well for farms. So I think we can perhaps pick up and have a bit of a walkthrough on countryside stewardship in a bit more detail. One thing I just want to do, whilst I've still got the mic though, and I mentioned it earlier, is today is your last opportunity to apply for the Slurry Investment Grant. So if you want to kind of jump off after the end of this call and have a look online for the Slurry Infrastructure Grant and see if that works for you. It's the first round, there will be other rounds to come, but today's the deadline for that, so please have a look. So over to, I think, Susan.
Yeah, good afternoon, everyone. Thank you, Jonathan. It's really good to see the details of the new Defra schemes coming through. It's something, and particularly the payment rates, so it's something that we've been calling for, and members and farmers have all been waiting for some of that level of detail so they can start to make some informed decisions. So it's well worth having a look at all the details. I see there's a whole list of the blogs and information, links to the information coming up in the chat. So please do go and have a look at those. What I was wanting to talk to you about today, though, is the environmental markets outside, separate from the Defra schemes. I think for many people, the Defra schemes will be the primary source of environmental funding. They're familiar, they're relatively low risk and relatively short-term contracts, so it is well worth having a look at them. But what we've seen with the publication of the Environment Improvement Plan today, that sets out a number of short-term targets to complement the long-term targets that were published before Christmas. The size of the challenge is huge. So it's pretty widely acknowledged that public funding isn't going to be enough to address the scale of change to meet those targets. And the government itself has its own target to encourage at least £500 million per year of private sector funding by 2027 and up to £1 billion per year by 2030. So it's clear that these private funding coming into these environmental markets is going to be an important opportunity going forward. So I'm going to have a quick chat about what environmental markets, what we mean by that, look at the opportunities and risks, think about how to access these markets and what you can do now to get prepared for it. So firstly, what do we mean by these environmental markets? There's an awful lot of language being used that is not settling down particularly quickly. There's things, nature-based solutions, nature finance, payment for public goods, ecosystem services, investors, project developers. It's a whole new language that we're needing to learn. But I think it's important not to get confounded by that and to make sure that we keep focused on what we're trying to achieve. Put simply, these environmental markets are a way of valuing some of the environmental services that you provide through using your natural capital assets. So that's things like soils, woodland, hedgerows, rivers, waterways that you've got. So what can you do with those to actually create some of these ecosystem services that will be valued by the market? So if we go to the next slide, this isn't a flash in the pan market. There's some serious government and business drivers behind this marketplace. We've got legislation, first of all. There's the Climate Change Act requiring the economy to be net zero by 2050. There's the Agriculture Act, which has laid the ground for the payment for public goods and the government schemes that Jonathan has been outlining. And then there's the Environment Act, which has legal environmental targets. Some of them are on the face of the bill, others not on the face, but it's still serious targets for environmental improvement. This is coming through into new regulations. So things like biodiversity net gain and nutrient neutrality are regulatory driven. So there's a regulatory basis to those markets, which is driving those. There's also climate and nature related financial disclosures, which would climate related financial disclosures are already out. Nature related financial disclosures will be coming soon, and that's going to require corporates and large businesses to look at their risks related to climate and nature, and that is expected to flow through into investment into the sector. There's also just simply business responsibility. Many businesses are looking at their reputational risks if they are seen to be damaging the environment, and looking at what they can do to either offset the damage they're doing or minimize the damage they're doing first, then offset, or simply to invest in environment because it makes it a good story for marketing, for example. The other reason is that it does drive business resilience as well. So there's lots of reasons why businesses are looking seriously at these environmental markets. If you go to the next slide, please. So let's have a look at the types of environmental markets that we're looking at. The first, I've split this into four. To be honest, we can cut the environmental funding in lots of different ways. I've put it into these four main groups. The first one is the government schemes. That's what Jonathan's been talking about, the environmental land management schemes. So we've got sustainable farming incentive, countryside stewardship, and the landscape recovery scheme. All fit within that. There's also the England Woodland Creation Offer, and there are other funding pots as well, such as the Natural Environment Investment Readiness Fund that is putting sort of pump priming money into new ways of setting up the market, for example. Then there's the offset markets. The most familiar of these is probably the carbon offset market. That's a voluntary market, which I'll talk a bit more about these in a minute. There's biodiversity net gain, which is a requirement for developers and those and infrastructure schemes to offset the biodiversity that they damage plus 10%, a minimum of 10%. And then there's nutrient neutrality, which is requiring developers who are adding to the loading of nutrients to offset that loading before they can get planning permission. So those offset markets are becoming quite well established now, and are worth having a look at. Then there's corporate funding. So retailers and big brands, water companies, and other national and local businesses are all looking at what they can do, whether it's for their environmental responsibility or for marketing purposes, or simply to reduce the cost to their business. Then they are looking at investing in and providing funding for environmental actions. And finally, there's a number of charities, including Woodland Trust, Heritage, National Lottery Heritage Fund, for example, that provide funding for various environmental projects, and volunteers quite often as well, which is often very helpful too. So that's one way to look at the market, and I think thinking about it in these different types of markets can help get your head around the different offers that might be available. How big are these opportunities? What are they? How big are the opportunities, and also what are the risks? If you go to the next slide, it's really quite difficult to establish how much money. There's lots of money, lots of figures floating around. We know that the government funding for ELMS will eventually be around about 2 billion per annum, assuming that the current level of funding is maintained. And once BPS goes down further, more of it is going to be invested into the environmental land management schemes. For the other markets that are still developing, it's difficult to get a handle on it. We expect that biodiversity net gain offsetting is likely to need around 5,000 to 6,000 hectares per year. The value of those varies hugely, so it's very difficult to put a figure on it. Nutrient neutrality offsetting, that's just becoming established now, and there's a new scheme available, but it's unclear. It's more likely that that's going to end up with land purchase, because the term required for nutrient neutrality offsetting is between 80 and 120 years, which is it goes beyond what most people maybe feel comfortable with having an agreement over. So it's more likely to be a land purchase situation. Then there's the carbon sequestration and avoidance, the voluntary carbon markets. And again, big figures being talked about, but the reality, we're still working out what that might mean. What we do know is that there is this funding gap, which means that private sector funding is going to be key. And as I said earlier, the government has a target of finding a regular £1 billion per year from the private sector by the end of the decade. So there's a real opportunity there. If you go to the next slide, please. So if we look a bit more detail, I've got one slide on voluntary carbon markets. It probably needs at least a day to really do this justice, but it's really to highlight the carbon market is something it's worth looking at. There are some risks, there are some unknowns, but it is worth having a look at and certainly building your knowledge on. So this is essentially for the creation and sale of carbon credits, carbon offset credits in particular I'm talking about, and it usually means long-term land use change, either for woodland or restoring peatland for emission avoidance. It's important for the buyers of the carbon credits that they are high integrity, and that means that they need to have certain requirements, including additionality. So it's got to be new carbon. It's not about the carbon you've already got in your land. It's about sequestering new carbon or avoiding new emissions, and permanence. And permanence means a minimum of 30 to 40 years, could be 60 years, for example. So it is a long-term contract. And I think that when you're looking at carbon offsets, those requirements will mean that it puts it into a different realm of consideration. You also need to think about land valuations when you're looking at whether the offer you have in front of you is worthwhile doing. There's land valuations, tenancy, terms, tax, and how to deal with some of the liabilities. You might also need to consider your own future net zero requirements if agriculture is required to be net zero at some point in the future. Soil carbon is a different thing altogether. And while there's lots of language that's talking about soil carbon offset, soil carbon code, that still has to be, some of the issues around the permanence particularly still have to be resolved. Having said that, there are offers where you can be funded by the supply chain to reduce your carbon emissions and to sequester carbon in your soils. And they are generally shorter term contracts and are considered insets rather than offsets. So they may well be worth looking at. Next slide, please. So when it comes to biodiversity net gain, this is it seems to be the favorite topic of conversation for some people at the moment. It is, as I said at the beginning, this has got regulatory basis. It's going to be mandatory for housing developers and other developers to offset their biodiversity damage by November 2023. So it'll start from November 2023. There are already some schemes going into place, and there's businesses that are looking at starting the process of biodiversity net gain now in advance of it. That's called habitat banking. So this applies to all housing and infrastructure developments. They need to measure their biodiversity value of the land before development, and then they need to provide compensatory habitat plus an additional 10%. So you get an increase in biodiversity value. It is an opportunity for land managers to provide offset habitat, but there are some caveats here. Firstly, it's only really going to be available to those near development sites. There is a mitigation hierarchy that says don't do damage first, replace the habitat close to the site, and then so they're mainly looking for sites that are close to the development sites. Also, don't expect that you can put in your best conservation land. The people who are looking for the biodiversity uplift are really looking for poor land that has the biggest potential to give the gain. So they're really looking for poor land near the development sites. There are also long-term agreements, minimum 30 years. And that will be usually will have some sort of legal basis to it through either a conservation covenant or a section 106 through the planning system. So these are long-term legal agreements that you'd be signing up for. It's not completely about handing the land over to environmental management. There are some opportunities to do low input farming depending on the design of the scheme. So it can go hand in hand. There are various models for this. Sometimes it's about the landowner delivering it. There are other leasehold models as well. And whatever you're looking at, you do need to consider the land valuations, tenancy terms, tax and liabilities that might come with those contracts. And crucially with biodiversity net gain, what happens at the end? And there's certainly no clarity yet as to what happens at the end of the contract if you've done some amazing habitat creation. the chances of it coming back into its former use is probably limited in 30 years' time. So if you go to the next slide, I just wanted to quickly cover some of the water companies. The water companies are doing a tremendous amount of work on environmentally, and some of that funding is available to farmers and land managers. There's various different types of schemes. Some are capital grants and woodland planting grants, for example, tree and also hedge planting, but also for creating habitat projects for wildlife, and also natural solutions to flood management, and protecting water quality is usually one of their primary aims. So it's worth having a look at your local water company to see what they may have on offer as well. Next slide. So the question is, there's lots going on in this space. There are lots of new people in the supply chain. There's people who do the measurement. There's people who do the project development, and there's the buyers, and then there's investors. So how do you as a landowner and farmer start to think about accessing this market? If you go to the next slide, the first place to start is looking at your own land. I think if you start looking at what you've got, identifying your own natural capital assets is the first place to start. What have you got and what more can you do is the key question. There are a range of tools and services available to help you do that. You can use local experts or volunteers to do some of the measurement. If you're going into biodiversity net gain, you will probably need an ecologist who will use the biodiversity metric that's available to do the measurement there. And then it's worth also having a look at what the local priorities might be, because that might give you some inspiration for what might be available. And for the local nature recovery strategies that will be coming through soon, I think there'll be guidance out for local authorities in the spring this year, will be a good place to start. Then you look at what more you could do to identify what opportunities you might have. And then really it's a case of looking at the market, what's available in your area, develop your market understanding and the technical knowledge and your skills. Worth having a look at farmer clusters, because they're very active in helping to develop understanding of the market, or developing your own local network with local specialists and the local authorities. It's worth taking advice, especially on tax and legal aspects if you're getting close to the contractual side. And then it's worth speaking to brokers and project developers. Now, if you want a couple of areas where you might want to look at, I found these tremendously useful in understanding the whole sort of shape of the market. The first is the Green Finance Institute Hive, and they've got a role in trying to increase the understanding of how the markets work and how they operate and what you as a landowner can do, plus all the other people around that supply chain. And secondly, the Ecosystem Knowledge Network is another source of information. They're just building up their hub at the moment, and there should be a button that'll just come up in a minute that shows that one. So they've developed this nature-based finance learning hub, which is worth having a visit. They've got case study, both of them have got case studies and examples. So if you want to try and get your head around what these markets mean, that's a good place to start. And then next slide, please. Accessing the market. You may wish to go and speak to buyers directly. You might know a local developer or a local business that you could speak to directly. Most people will access the market through brokers, which could be land agents, habitat banks, or other specialist carbon brokers, for example. And there are a range of advisors who can help on measurement and accreditation as well. We've got a natural capital directory on the website that's available to everybody. If you want to have a look at that, there's a whole list of companies doing different things and different offers within that you can have a look at. And then the third option is actually the bottom up. And I quite like this one. This is where farmers and landowners and other specialists are working together in a collaborative way to identify what they might be able to do at a bigger scale than you might be able to do yourself. Farmer clusters are developing this approach quite keenly, working together with environmental specialists like the Wildlife Trust to look at what schemes that they can put together. Now, this might be about putting a scheme together for the Defra landscape recovery scheme, for example, or it might be about accessing the market. And then my final slide, if you just move to the next one, we've also got some resources on the CLA website. Some of those are free, so the two on the left are free to access, and then there's others that are for members only, but we've got a whole range of different resources available, and you can always phone us up and speak to us as well. I think that's the end. Thank you.
Great, thanks, Susan. So if all the speakers could switch off mute and switch their cameras back on, and if we could stop sharing the slides. We've got a lot of questions that have been asked, and those that have been answered, I will just go through some of those as well, because I think there's some interesting answers that some of you will be interested in hearing. Just to start, Jonathan, one here: as an organic dairy farmer, we currently have the whole of our farm in stewardship, and the income from this was slightly above the BPS in 2022. How can we make up for the loss of BPS when we are already doing stewardship? The 10% average increase in countryside stewardship seems to be made up of large increases in very niche items.
Thanks, Kath. Yeah, so it's a very important question, and a difficult one as well. So I think there's a couple of ways. The main way to make it a broader question, so obviously I wouldn't know the specifics of your kind of farm business, but to make the broader question, the way that we expect, I hope that farmers can be adapting and responding to these changes are going max on our schemes as far as possible. So, for example, that's partly what Sustainable Farming Incentive is about, by bringing forward, adding extra options which aren't already available for countryside stewardship, so around soil management or integrated pest management or nutrient management. Those options should have some new elements in them which aren't in countryside stewardship. We've also added, I can't remember the number, I think maybe 30 extra options we published last week will be available in the future compared to what's currently in countryside stewardship. So we're expanding the offer, and hopefully all farmers will have the opportunity to make the most of all those different opportunities. We know from talking to farmers who are feeling more confident about these changes that they are making changes to their own farm business to reduce costs, to become more productive, to improve animal health and welfare, looking at the use of genetics, all those activities which you may or may not be doing. Again, I don't know the specifics, but that there's a lot of area there to reduce costs. We're offering free business advice through the Future Farming Resilience Programme. So business advisor will come along, and I think we've already talked to over 10,000 farmers. We hope to talk those trusted third-party sector experts to come and talk to, I think, as many as 32,000 farmers by the end of next year about free business advice and how they could adapt and respond. And then specifically on countryside stewardship, as we say, we have increased the payment rates. Which ones went up was based on just what's changed in the market recently. So hopefully that, for example, grant offers should have gone up enough that they would make some more sense to look and apply for. And then what the plan is, that if you are on countryside stewardship at the moment and you can't add more stuff for SFI, you don't work, from next year, you should have the opportunity, when all our new offers are on the table, you can look again at the flexibilities of an agreement and redesign a countryside stewardship agreement that is kind of bigger and better and works better around your agreement. So that combination of maxing out our schemes, accessing either the free business advice or our grant offers, which can help you reduce their costs, so vet visits, which can reduce your reliance on antibiotics and inputs, as well as, yeah, those two are the kind of two main ways we see farmers adapting and responding.
Thank you, Jonathan. Simon, can I just ask you to stop answering the questions by typing, because then we can't ask them live. So I think some of the questions are good ones to ask live. There was one question for you, Simon. If a parcel of land has countryside stewardship on it already, but only has a small corner in the parcel, is it possible to put the rest of the parcel that's not covered by countryside stewardship into sustainable farming incentive? I think, Simon, you've answered that live, but if you want to answer, and then Jonathan may want to input to that as well.
Yeah, I think this is where the smart IT comes into play, because some of it will take these out. There are, for example, environmental stewardship non-rotational options, which will have to be manually adjusted by the RPA. For some reason, I'm not clear why. So that depends, and that's where, if you like, when I said at the end of my presentation, agreements, where there's issues to clarify like that, I might just hold the agreement up, and it might not come to you with a fortnight as record at the moment. So it's still to be clarified. I'm sure it'll be probably in the guidance, because that's a very common question that's going to come up
Great. And there's a question here for Jonathan. Can the SFI only be amended once a year? So, for example, we'd probably be looking to go into the advanced levels of the soil standards, but they aren't yet available. So if we applied for what's currently available and then the new levels came out before the year is up, can we amend to come out, or do we have to wait for the anniversary of when we applied for the SFI?
We are going to make sure that if you were to apply for SFI, so for the soil standards now, that say in August time you fancy applying for integrated pest management, we are going to ensure that you can do both those things. So what we wouldn't want is that someone to apply for SFI now, they find themselves effectively locked out of applying for anything more in SFI for a whole year. So you should be able to apply to the SFI offer that's available now, and then you will be able to apply for new offers later on this year. I think if you talked about ambition levels there, I think that suggests you might be looking to apply for the soil standard. The plan is no longer to add in an advanced soil standard later on this year. We've confirmed what we'll be rolling out of SFI this year, which is nutrient management, integrated pest management, hedgerow standard, the arable and horticulture land standard, improved grassland standard, and the low or no input grassland standard. So if you're waiting with bated breath for a higher ambition soil standard, that's no longer to be available. The reason for that is because, in particular, lots of feedback we got from farmers was that the different levels of ambition actually was causing some challenges. It was making it harder for smaller farms to apply and access the offers because they had to put certain percentages of their land in, and also because the way that their ambitions worked, you had to do everything in the bottom, everything in the middle, and then everything in the top to access the top. And that meant that actually that we were getting quite complicated for us and for farmers to design a set of offers that work like that. And there are some farmers who wanted to do high ambition stuff in the pilot, but they couldn't do the stuff in the middle for a variety of reasons. So we've done a bit of a change in response to pilot feedback and what we've learned from people in the first year, and we're shifting away from the ambition standards which stack up and much more kind of buffet type. Here's a range of opportunities, farmers can pick and choose them together. So the short answer is yes, you'll be able to apply for it, and you'll be able to add. If you apply for soil standards now, you'll be able to add IPM and nutrients or whatever when that's available.
So Jonathan, there's a few questions of the interaction between HLS, ELS, Countryside Stewardship and SFI. So there's a few questions around that, and one specific one that asks, will being in entry-level stewardship mean that we will be excluded from certain SFI options, for example, hedgerow management standards?
The simplest answer is if you're already getting paid for something for a scheme, then you likely won't be able to get paid for it through SFI. So not knowing the specifics, if you're already getting paid for it through an HLS agreement, which has the ES bolt on, then it's unlikely you'll be able to access the get paid for the same activity in SFI. Is a short answer.
Thank you. And there was a question around the HEFA, the historic environment, so someone said that they came up against the HEFA when applying for SFI.
Yeah, Simon, I didn't know if you know about that. That sounds like a bit of that might be a land eligibility thing. I don't know, Simon, if you've got any wisdom you can impart on that.
Not particularly. That's quite a detailed question. I'll need
I'm the same position
on that one.
Yeah, we can follow up on that one afterwards, perhaps. So there's a question for Susan. Susan, what do you understand about carbon flow? Is this a carbon inset that you've described? I'm aware of a business trading carbon flow, annual carbon sequestered, in addition to carbon stock, which is the percentage soil carbon, which may also be traded or leveraged against a farm business's carbon footprint.
Thank you. Interesting question. I mean, I think the simple answer is I'm describing an offset as a carbon offset credit as something that somebody else will buy, and they will use that credit against their own carbon account. If you're looking at a carbon inset, you may be getting funding to reduce your carbon emissions and to increase your soil carbon stores, for example. But whoever's paying you will not use that as part of their calculation in their carbon account. So it will still stay with the farm. So it will be part of the farm's own carbon calculation rather than outside it. So that's one way of looking at it. I think the other part of the question was around it's whether you should be looking at I think it was implied within the question anyway, whether you should be just selling. You look at your own carbon flows, so what you've sequestered and what you've released, and then if you've got an excess, if you could sell those as carbon offset credits if you've got a market that would take that. The problem I see with the soil carbon market is the long-term permanence part of the high integrity credit that a lot of the market is looking for. But like I say, it depends who's buying and what they're buying, whether it's an offset or not.
And Susan, a question about tenant farmers. How do tenant farmers sell their carbon without a 30-year tenancy?
Well, I think that's where some of the soil carbon markets may be appropriate, because they can be annual or a few years, but quite a few of them still have carryover of requirements to keep that soil carbon in soil for a period of 10 years. So anything that goes beyond the tenancy agreement would need to be in collaboration with the landowner, and we would the landlord, and we would encourage speaking to the landlord about any of these schemes before starting if they go beyond that tenancy term.
Okay. And a question whether late drilled winter cereals qualify as a cover crop.
That's not one that I've got off the tip of my tongue. So we can perhaps come back and provide a comprehensive answer to that. Just by way on that, one thing it's worth noting, one of the things I talked about how important was that we changed the way we operated. We'll get the specific answer to that, but one of the things that we've tried to do is avoid being really specific about the long list of things that we mean or don't mean are covered by a particular cover crop. And instead, the way SFI is managed is it says, this is the sort of thing that we mean to achieve this sort of outcome, and here are some examples. So the way we've designed the scheme is to allow some flexibility. So as long as you've got something which is a cover crop which provides cover for soil over a certain time period, we're fairly relaxed about what it is. But anyway, we can happily dig into the details and come back with a definitive answer. But it might be that the question has been prompted by someone who's looked at the guidance and says we aren't specific about it. That's deliberate, because when we get specific, we then have to come along and check and write a long list. So where we're managing SFI is we say, for a cover crop, if it covers the ground from A to B over this period of time to this sort of extent, then you can sort of use whatever you want rather than being definitive as a list. So that's how we're trying to manage the scheme. But we'll get the answer to that question.
Kath, there's always been an advantage in schemes, whether you're dealing with, I go back years in terms of some of the support schemes, there's less script, so that there is flexibility to be able to do with this.
And I don't know if you're able to answer this one, but if not, perhaps something that needs to be reviewed. Will there be sufficient capacity in labs if there's a big increase in demand for soil organic matter analysis required for SFI?
So we have tested with some external partners who run those sort of labs, and their sense was that they had the capacity to help support them. I think so far we haven't had any sense, I haven't had any feedback that that's not the case. If the scheme was the expression that we use as a catastrophic success, where we have loads and loads and loads of people doing it, and we were to find that was the problem, then that'd be a very nice problem to have. But so far we've not had a sense that is a challenge. But kind of touch. I should probably touch wood.
Okay. There's a question here potentially for Susan. Can you get paid for doing cover crops and manure management in SFI if you're being paid for them under a soil carbon credit scheme?
This goes back to what Jonathan was saying earlier. If you're getting paid for the same thing twice, you can. I think in theory you can. Defra has left it open for private funding to come in on the same land, provided you're not being paid for the same thing twice. I think it would be worth speaking to the provider, whoever you're going through for your soil carbon, to see if they're content with that, because one of the things that they'll want to make sure is that they have got that credibility in what they're selling into their buyers. So it may be that they're the ones who'll say, no, I don't think so.
Jonathan, on cover crops, can they be winter grazed, or is it not then deemed as green cover?
Okay, that's another good question. I'm not close enough to the detail, unfortunately, but we can. Yes, let's find out. I will come back on that question and we'll put the link in specifically on.
So if there are questions that can't be answered, we will try and come back on each of those after today. So we'll get the answers from the appropriate people, whether it is from Defra, from Simon and a few, or from the CLA. We'll get that back as soon as possible. So a few questions about when the details of what is available this year for so SFI 2023 and the requirements under each one, when that will be available, and a mixed comments really on some people saying that they're really pleased that we've got more detail on SFI, and Defra genuinely appearing to be listening. Pity that it's been so long, but also comments that actually it still sounds very complicated. So I guess it's how we simplify that to make sure that everyone is able to understand how they can enter the schemes.
Yeah, I think it's on the point around kind of listening and responding, so that's really positive. And I think we would something we are really keen that we do, and you've heard me talk about it today. I think you can always get better at it, but it's definitely become embedded a sort of way of working, and thanks to the hard work of lots of colleagues in the CLA and others for helping us make these things better. In terms of simplicity, the thing that I'm very happy to accept that I think is too complicated, or rather too long to explain, is the package of offers that we have available. So we do have a challenge where I rattled off all the schemes that we have at the beginning. There's a lot of them, and not a lot of people who would instinctively be able to kind of rattle them off the top of their head. So the reason why that's so unapologetic about that being a position at the moment is each of those offers are doing something really valuable and really necessary that we know that farmers and others want us to give them the opportunities to provide them with. So if we were to just say, we're not going to do a slurry offer because it's too complicated and it's another scheme, that wouldn't be right, because we know farmers want us to provide funding to help them make those changes. But what we're going to do, which will make it simpler and will stop people having to remember the names of all the schemes and all that, so on and so forth, is two things, one of which you've already done, which is make it really easy for the Future Farming blog to understand what offers are available when and how you can apply. And the second thing, which we started but we know we need to accelerate, is you just go to a single place and you just access and you say, I'm a farmer or landowner, I'm interested in doing those sorts of things. And you don't need to kind of translate, I'm interested in cover crops and I'm interested in cattle crushes. You don't need to translate those things back through our schemes and then back into offers. You can just say, I'm interested in changing my farm business to lower my inputs and and you can access that in a joined up way. So the joined up service was something we'll definitely be working across this year as we make SFI predecessor stewardship work more closely. And the idea will be from 2024 onwards, everything will be joined up. So there'll be a single point where you can go, I'm interested in grants. Let's find out what the grants are rather than having to remember all of the names. But when you're in the scheme, and I hope, as it showed from Simon earlier, recognizing that farming is complicated in different farms, and there's lots going on rotational, it's a complicated system. Our bit, what shouldn't be complicated, is the application. What should, and probably always will be complicated, is working out if it's best to have cover crops in that field alongside X, Y, Z. That's farming, is complicated. We need to make sure our offers are not making that even more complicated. So it's simple and it's easy. You can just rock up. Once you know what you want to do, you can just spend 15 minutes doing it online, and then it's bish, bash, bosh, you're done. That should be the bit that's easy. And hopefully, as Simon showed earlier, we're certainly making progress on making that easier.
So following on a bit from that, Jonathan, there's a question for the new SFI standards for 2023. Can you pick and choose which actions you take up from each standard, or is it all or nothing? So for example, can you choose the no use of insecticides action from IPM standard in isolation?
I think, so come back to the point I made earlier, we try to avoid stacking up as much of options as possible because it adds complexity. So we simplified it as far as possible. So it is more of a pick and mix option. So for example, on that specific one, I think to access any funding in integrated pest management, though, you do need to pull together a plan. You do need to develop an IPM plan with an appropriately qualified advisor, an agronomist who can say, here's what we think is the best way to manage nutrients and or pesticides or pests across your farm. So you have to have that plan first. And then you can unlock the ability to get paid to do specific things. And the reason why we thought long and hard about that, or the reason why I think that's right, is that we know from talking to farmers, agronomists, and those people who are the experts in that, that having that plan makes it much more likely that those sorts of activities will be effective. So we're simplifying as much as we can, but where the evidence is really clear that having that, you have to do A to do B, is really, really effective, and it's simple and easy, we will do it as far as possible. So the specific way, you have to do the plan first on that specific point.
Jonathan, there's been a number of comments since the announcements last Thursday about the opportunities for those in SDA, non-SDA. So there's a question about what is the explanation for the difference in payment rates between the SDA and non-SDA low input? Why are they not equal?
So the way that we set payments across all the offers is based on the income foregone and cost incurred. So our assessment about how much it would cost for someone to undertake the work they need to do, and how much money effectively they would make otherwise if they were farming if they were just farming the land in a kind of the average type of way. So those payments are just based on that calculation and that assessment, and they're based on the costs and the income of the average farmer. And I'm using average in a precise term there, the farmer who's kind of halfway up in terms of how effective, productive and efficient they are. So where their prices are different, it's just because that's our assessment about about how much it costs to do the work or doesn't cost to do the work, what the otherwise income will be. There's no further kind of gaming or tweaking of those rates. It's just, what do we think it would cost the average farmer to do this work, and what would they otherwise kind of make the money from?
A couple of questions for Susan around biodiversity net gain. So a question from Anthony about, do we know yet the exceptions to the requirements? So that's presumably from a planning perspective, if you're putting in a planning application yourself and needing to meet the 10%.
As far as I'm aware, that's not been clarified yet, but I will check with my planning colleagues.
Okay. I think we're still waiting to hear back on the consultation, aren't we? And biodiversity net gain offset habitat only available near development sites. How is this defined? So the calculator.
Yeah, that's really how it's calculated. So it's weighted. The calculation is weighted. And the nearer it is to the site, the more points there are, basically. So it varies depending on what the land is and what you're going to be doing with it. So it's not a straightforward calculation that it's got to be within a mile or anything like that, but it is about the weighting that's given based on what you've got and where it is.
Yeah, so it essentially, you would be able to provide offsetting even if you're quite far from the development site, but you will have to provide much more increase in biodiversity if you were quite far away. So a few more detailed questions about SFI and countryside stewardship. Is there any future thought under SFI or countryside stewardship for simple ditch and watercourse maintenance and clearing? WT3 covers high environmental value.
So I think everything that we've covered, everything that we're going to pay for, which we published last week. So I think we are, if it's not covered in the separate section, so we cover it, we can drop the link into it. So the short answer is, if it's not in the document that we published last week, then it won't be included. So if you've looked at it, it sounds like you might have, and it's not included. That's the answer. But yes, so from a very quick look, kind of reading and writing at the same time, there are some aspects in there around kind of ditch management, but as you say, they're perhaps less. They are in specific areas only, where there is kind of clear environmental benefit. So it looks like the aspects you're referring to are the only ones that are kind of currently covered at the moment, which will be covered through ELM.
There are two good points, though, Kath, that come out of this, and that is that in fenland areas where the hedges basically are ditches, they're inverted hedges, aren't they? And then scope to cover those. So some of these water things are actually going to be quite important for us at the end of the day in areas like East Midlands.
There's a question about the Rural England Prosperity Fund here, and I guess it's something we've had a lot of feedback from members on as well. It's how fine a tooth comb are Defra applying to the Rural England Prosperity Fund bids from local authorities, and are they really the correct body to deliver this? The money's supposed to be ring fenced for rural, and yet there are many that wanting to use it towards bus routes or dinosaur tourism projects with very little continuity or guidance between them.
Yeah, so I saw actually over kind of lunch. Those ministers are seeing some of the specific decisions that are coming forward. They have a role in kind of supporting some of that decision making around specific projects. So there is some Defra ministerial oversight, which is something which, when the decision was made to delegate to local authorities, was kind of agreed with DLUC and with other colleagues, so that Defra ministers had a role in ensuring that projects were being delivered in a way that was consistent with what we wanted to achieve from the fund, which, as you say, is particularly around making sure it does work really well for rural, and that kind of rural ring fence was staying in place. So there is a process to make sure that happens. I can't comment on the specifics of that, but that definitely is in place. And the reason for kind of managing it through local authorities rather than kind of through separately was, as far as possible, trying to deliver through local authorities, give them the opportunity to deliver a kind of contiguous, kind of joined up service which works best for them, as opposed to having a kind of separate standalone offer, which one of the feedback we heard from Leader, although it was very effective in lots of ways, was it kind of delegated rural from those local authorities back to Defra and back to central government. Part of rural proofing is really important to make sure local authorities are routinely thinking about rural issues where they have the lead and responsibility. So that was part of thinking about why local authorities are the right vehicle. But again, as ever, I'm sure Kath and the team will be feeding back to us how that's going.
We have had numerous meetings about it, but can I just emphasize how important that is? Ultimately, local authorities, many of them just do not recognize the opportunity that the rural economy presents, and the huge, amazing things that rural businesses could be doing with the right support. So I think that there's a lot of education to be done within local authorities to make sure that they recognise that, and that some of this money could be put into things which would result in a huge economic activity locally, rather than putting Wi-Fi in a village hall, which is probably going to result in very little in terms of the local economic activity and benefits to rural businesses, where we want to make sure it's aimed at. Simon, a question: how will the SFI Smart IT know the size and location of countryside stewardship areas if the annual revenue claim is replaced with an annual declaration? And I know you have answered that writing, but I thought it was a useful one to bring up.
The good question is, what did I say before? Because I can't get it up on the screen. It's as I understand it. Hang on, let me just get this right, because I did make a note of saying, because we've had questions about how SFI interacts with other funding schemes. I've looked at last year's guidance, the 22 guidance. There were 15 pages of how it interacts with other schemes. So there's going to be plenty of information in the guidance to help people, because this looks like an area of uncertainty as to how you juggle one, not the other. So that's some reassurance that the information is getting put in there. And if it's not in there, then we'll be asking Defra to make sure that it is well covered. So going back to the question about how do we know? The IT and the land data that's around it, that's the key thing. They've got the right land data. The note I've got here says RPA will have arrived at what is available to claim under a particular standard, taking out incompatible countryside stewardship, non-rotational and rotational, and higher level scheme non-rotational options, for example, or a standard and land cover. However, for ES, environmental stewardship, rotational options, the RPA will manually adjust the available land area and contact the farmer before the SFI agreement is offered with the correct available land details, area details. So there is an opera. This is what I was referring to in the end of my presentation, when I was saying, look, there will be occasions where it won't necessarily be 2 weeks before the agreement offer arrives, or it might be a bit later. Is that where they're having to check those sorts of issues, then obviously put the process in for the RPA to deal with, and it takes up time to actually just resolve it.